Good morning and welcome to the EZFX Trading Room broadcast for September 27th, 2016, Wednesday. My name is Bradley Freed, and you'll be joining me for the next 20 to 30 minutes on this broadcast to review our watch list from yesterday, look at our open trades, get any updates about those trades. And if there are any new trade ideas that I'm interested in trading, I want to share those with you too, and I'm going to walk you through how those are going to work, what I'm thinking about them. It has been a challenging week. As I said yesterday, I'm kind of taking my foot off the gas. We have 3 open trades right now, long on the pound, and I found that the system just wasn't really, we weren't getting good response from the market to the system this week. So I want to just focus on managing out those 3 trades and then try again next week. This happens from time to time, and it's after you've traded the system for a while, you can just kind of feel it. Because you're used to getting, let's say you have 7 trades, you're used to getting at least 2 wins out of those 7 trades, and seeing a net profit at the end. But when you have, let's say, 6 stop outs in a row, then you kind of know that something's not working this week, and there's just not a lot of there's volatility in both directions. There's not a lot of clear trending after a reversal. There's just really severe ranging and retracement. And in those cases, it's kind of best just to pause or pull back or cut the number of trades you're taking and wait till the following week and see if the dynamics change and then try again. So that's kind of what we're doing. You can see that we had 5 stop outs in a row, and it's actually 6, I think. There was another one last night. So that's a sign to me that something wasn't going right. However, our pound pairs are up after overnight, the remaining open ones. I'm hoping, and this is kind of the best outcome scenario for this week, is that we recover some or all of our drawdown with these pound pairs, and that just brings us back to even to start a new week where we can try again and hopefully have enough edge and alpha to get some alpha out of this market. So let's go ahead and review the watch list and see where we were yesterday. We were watching a euro pound sell, a pound Aussie sell trend trade, pound dollar buy, dollar peso buy sell trade, and an Aussie dollar buy, trend trade, and an Aussie dollar buy trend trade. On our open trade list, we had pound yen buy, pound Swiss buy, and pound New Zealand buy. And I won't go through the closed trades. I do need to get the blog caught up, so we have those details captured. But I have screenshots. I have, of course, all the documentation of the signals we sent. So I will try to get those up and up to date today. Let's go ahead and jump over to the charts and see where we're at with our open trades and any new trade ideas we may have, with the caveat that I'm not going to be taking additional trades for the rest of the week. Okay, so going to our list, the one that wasn't, there's so much going on, I didn't quite get this, but the Aussie Newsy was an open trade. And it was an open signal trade, and it kind of got lost in the shuffle, but it also stopped out. And that's the additional stop out that I wanted to talk about, at least make a note of. And the loss on that, and this is a great trade. We had a class A supply zone, we had a sell bubble, we had a trend line break, we had a triangular moving average color change, and it just wouldn't break down. It wouldn't break down. It retraced and made a new high. And now it's showing divergence again, but I'm just not interested in trading this until I want to give it a week. It's setting up a new sell bubble here. So given it another week, maybe it'll be a totally different world, and these will be responding differently to our system setups. Back to what I was talking about, the total loss on this was just 54 pips. Because it was a smaller trade size, I was able to use our 1% limit to trade more lots on this. But it was never, value-wise, it was never more than 1%. The stop was never more than 1% of my trading equity. So there you go, 6 in a row. Good signal to pull back, stop, or stop or rethink and give it a few days to sort itself out. Wall and getting stopped out when something isn't working. And it's a good point to make that win percentage is not a constant. Win percentage is variable, and it'll go up, it'll go down. It's like if you're playing blackjack and you're counting cards, there's times when you have a higher win percentage, and there's times when you have a lower win percentage depending on which cards are up at a higher probability to appear from the dealer, from the stack, from the shoe. And we don't have cards here. We don't have a clear way of knowing, when the probability is up or when the probability is down, but we do get signals from the market in terms of how much are we winning as we trade. And we're sort of keeping our bet constant. In blackjack, when the probability goes up, that because it's a finite situation. So you can actually increase your bet as the probability increases, and that's how you get kicked out of a casino and they know you're counting cards, is because you're trading very small and suddenly you start trading big and suddenly you start winning, and then they throw you out, take your picture, send it around the world to all the casinos, and then you're banned. But in the market, we have no idea. The only thing that tells us is how much we're winning or losing. We keep our bet constant because we can't be confident that, okay, we're getting to a high probability point. We keep our bet constant, but when the market tells us that it's not working, when we have a low probability situation, we pull back. When we start winning, we can start making more bets, taking more trades, being a little bit more aggressive. And that's kind of an art form. That's something that you get used to. But the key thing, the worst situation is if you start losing, then you get emotional, and then you're taking as many or more trades, being more aggressive than you would if you were winning. And then you can dig a hole for yourself unnecessarily. And that's a drawdown you're going to have to work yourself back from when your win percentage goes up again. And you don't want to have to waste time on that. You'd rather get into new profit right away so you can take that out and bank it or spend it or do what you want to do with it. So anyway, that's where we're at. That's my little mini lecture for the day. Let's look at our open pound trades: pound yen, pound Swiss, pound Newsy. Pound Swiss popped up overnight. It's broken this second trend line. It actually reached the current weekly pivot, dropped again. It may retrace down, but I'm still holding on to the initial trade plan. I'm not going to change that. Our initial target is the current monthly pivot at 1.2787. Our final profit target is a weekly pivot from 3 weeks ago at 1.2972. I'm not going to change that trade plan for this. I'm not taking new trades, but I'm not changing the plan for anything that I have. With the caveat that if this hits the first target and gets into the money and gets close, and then we get a reversal signal, I probably would go ahead and take profit, but that's just within our trading rules. Pound yen. This actually did break out. I got into this. I kind of regretted it because I didn't wait for the candle to fully form. It was 2 in the morning. I wanted to go back to sleep. So I thought, well, surely this often happens, that it breaks out and then it'll retrace down below the trigger, the entry line. And sure enough, that's what happened. So I thought, I really should have waited on that. But anyway, I didn't wait. It retraced back down towards the stop. It's broken out and it's returned to the highs it made when the initial entry formed. So that's okay. And now we're wanting it to get to higher highs. If it gets to the weekly pivot, that's a good start. But again, we have a monthly pivot target as the initial target here at 133.5723, and a final profit target at the weekly pivot at 136.4307. So those are our parameters. I'm sticking to it. That's just what we're doing for these pairs. Finally, pound Newsy. This was something that had dropped back to our Class A zone here, and it bounced. And this is kind of how Class A zones work. When I initially started trading this system, that was all I did, is when price got close to Class A zone and it formed or it returned to it, I would just buy it. Tight stop, go for pivot targets. And in this case, that seems to be what's happening. I've added more confirmation to the system since then. But we're getting close to the first profit target at the weekly pivot at 1.7984. Final profit target on this is the monthly pivot at 1.8144. So that has actually recovered quite nicely. I don't know if it'll get there or not, but it looks pretty good. It looks better than it did yesterday. And we'll just keep holding on to it and following the plan. And that's all I have open right now. Now, keep in mind, our other pound trades have also started showing signs of life. We have the pound dollar. It's broken the new trend line here. I still don't have a new buy bubble. The most recent bubble was a sell bubble. It dropped. This has kind of been, weak trend, breaking out. It is a valid entry. If I didn't have this low percentage thing going on this week, win percentage thing this week, I'd probably get into it. But I'm going to hold back just because I think it's the right thing to do. If I was going to trade this right now, I currently have good risk to reward to the monthly pivot here, and maybe the 50% retracement level is a final profit target. That's pretty conservative. I'm just not sure this pair isn't going to drop and trend down further, given the weakness of the pound and what's been going on for the last several days. Pound Aussie, same thing. This has stopped us out twice. I retraded it this week, got stopped out again. It's not rewarding taking the risk. It's broken this new shallow trend line. It's formed a new Class A demand zone down here. I fully expect it's going to give me a triangular moving average color change. We have no buy bubble. And that's looking kind of crucial to me at this point for taking a risk. No buy bubble means that this trend is kind of stable in a downward direction. No buy bubble means that it hasn't overextended itself yet in the sell direction. So I'm wary of trading this pair. This is a valid setup. We have nice targets, monthly pivot, weekly pivot above the 50% retracement level. On a normal week, that's what I would do. This week, I'm not doing that. Let's look at some of our things on our watching list, though. Euro pound sell, that was another one we were looking at. This has dropped and broken our long-term trend line. Again, this is another pound pair. It did have a sell bubble, though, which is interesting. That's a point of confirmation that I'm really going to be, it's in my rules, but I haven't always been looking for it because it didn't seem that it was really necessary in previous weeks when we were doing really well. But I think when you get into these situations, you have to start demanding more confirmation. That's one way that you stay out of trouble. This one has produced a sell bubble. The triangular moving average has changed color. There's a Class A zone above it. It hit and was repelled by. It's already moved pretty far. However, if you were to put a stop above the recent high, that's 106 pip stop. Down to the monthly pivot is 104. So you could actually trade pretty much 1-to-1 for that, depending where you put your stop. I would just put the stop right at this recent high at 94 pips and just not care. If it goes that far, it's going further anyway. So just set the stop really tight to the wick. And then you could have a final profit target at this weekly pivot here at 188 or 0.8433, or the 78.6% Fibonacci retracement level. But I'm going to move this. I'm going to call it an open trade. It's not a signal trade, with the caveat that I'm not going to trade this. I'm trying to be disciplined about. Call this a new trade. How about that? I'm trying to be disciplined about pulling back this week. That's and if that seems counterintuitive, it is a discipline. I mean, if you think about how many times have you been trading and you just want to keep trading, good or bad, that you feel like you have to be in a trade every day. And that sometimes that's good. Sometimes that's stamina. You have discipline as a trader. You're doing the work. You're in your process. You're making profit and accepting losses when they happen. Sometimes it can be self-destructive because you're actually just pushing yourself into a meat grinder, and you're taking unnecessary losses. And it's the key thing to keep in mind is what I said before, that when percentage isn't constant, that edge isn't constant. And when your edge drops off a cliff for whatever reason, and the market is telling you because you're taking losses in greater numbers than usual, you can just feel like it's as if you were stepping on the brakes in your car and it went right to the floor. You're used to feeling the brakes, start to grab at a certain point. You know how that feels. You have confidence in your braking system. You really don't think about it that much, but immediately if you hit the brakes and your pedal went to the floor and you couldn't stop. Well, that's kind of exactly what happens when your edge falls off a cliff. And it's a temporary thing, because overall we have good edge on this system. And when you have good edge on a system, it over a year of annualized results, you'll see pretty much what it is. It'll show itself as long as you've been trading consistently. But it will be high with some weeks, and it'll be low other weeks. So when it goes really, really low, then it's time to pull back just for a few days. All right, let's look at the pound Aussie sell trend trade. Pound Aussie sell trend trade. Okay, this has not really materialized yet. It may yet materialize. Remember, I said that we get this initial breakout, we wait for a retracement, and then the second breakdown below the zone that got destroyed. Well, it's a new Class A demand zone is formed, for one thing. So we would really have to see a failure of that zone before we trade at this point. So I would go ahead and move the goalposts, the entry posts, down to border the top and bottom of this demand zone. And if it punched through that, then we'd have the same test before we get into a trend trade. But this looks like it's probably getting ready to do a counter trend move. So I would not do that. In fact, I would just change the signal. Let's say this is a pound Aussie buy. And I'd call this just new, just like the euro pound, because this is also setting up according to our technical rules. Okay, pound dollar buy, that's the next one. This is also setting up. It's given us a new signal. And as I explained earlier, it might work out. I already have 3 buy trades on pound pairs, so I don't think I need to add to that. In a good week, when I was really winning hand over fist, I would add these immediately. But I'm going to hold back. These are available to you if you want to trade them, but I'm not going to trade them, and they will not be signal trades. Next, we have the dollar peso buy. That was going to be a trend trade. Let's see what happened with that. So this just didn't quite happen. This dropped. It's almost got to the initial early planned profit target. It wasn't really that tradable, simply because it stopped out and then it dropped very extremely. It didn't give us a good risk reward to the initial profit target after that. So this trade idea is just done. I'm going to pull this from the list entirely. Well, next time the dollar peso gives us something concrete, we'll try again. But this time it just didn't work out. Then we had Aussie dollar buy trend trade. This has actually broken out a second time. This is one I would consider on the next close above this former zone here, especially because we have a new demand zone here, which is kind of pushing it up. That's kind of good evidence this is going to trend further. I would go ahead and buy this. And then if you do go ahead and buy this, some natural profit targets would be, you remember, you're going to set the stop below this recent low or below where the bottom of the zone was once you get into this trade. So, and I know this is hard to see and I apologize, but let's say you got in up here. You could have a 42 pip stop to below the low made before the entry. And then you could have an initial profit target. This wouldn't really be enough here. So if you might want a little tighter stop, but let's say it does that. Let's say it goes back above and closes there, and you have, say, a 32 pip stop. Then it's going to be 39 to this first supply zone, the bottom of that, with a second profit target, the next one at 60. Or you could trend follow and see if it'll go further. But that's kind of how I'd play that trend trade. Just make sure you have good risk reward. Make sure at least your initial plan profit target has a risk reward ratio of at least 1 to 1. And then beyond that, you can trend follow. You can set additional targets or more aggressive targets. Once your stop is moved to break even, then you're pretty much free to do what you want without risk of sustaining a loss. So I would call this new at this point. It's getting ready to set up. I would wait for the next close above the dotted line, above where the former Class A supply zone was. to get into it. But once that's happened, that's your confirmation. You could go ahead and buy it. You'll set your stop below where that zone was. And your targets above, you can use the bottom of these supply zones above. Call that new as well. And so currently I'm not watching anything. And I'm really not going to add to my watch list or do some analysis or put some new trades on our list until the weekend, until we're through this trading week and we're getting ready for our next attempt to see where our win percentage is when we start the new trading week. So that's where we're at right now. I have 3 trades open. Those are single trades. That's what I'm trading for myself. There's 4 additional trades that are available to you if you feel you want to trade these. We talked about trade targets. We talked about stops. We talked about the trade plan. So go ahead if you have tested that and you feel that you want to trade those. I don't think it's a problem. Just be sure to size your trades. Don't risk more than 1% on the stop loss for any individual trade. Don't overrun your leverage on your account. Don't get into a situation where you have so many trades open that you're going to be in a situation where you're risking a margin call. All right, so let's jump over to the chat room and see if we have any questions real quick. And I don't currently have any questions. If you do have any questions, you can post them to the trading room group, sorry. Or you can send me a private message via the community. You go to community, you go to members. You can find me on EZFX, and then there'll be a private message button on my icon on your site after you've logged in. Just click that. You can send me a message. Very convenient. Or, as always, you can just send me a regular email and send that to ezfxsignal@gmail.com. Always happy to I'm always happy to receive your questions and give you any advice that I can about what we're trying to do. Okay, so thanks very much for attending today. We'll be back tomorrow with another edition of the EZFX Signal Trading Room. I really appreciate you attending. I really appreciate you watching this video. I realize it's been a kind of a tough couple of weeks. The best thing I can say is that once we get, for each losing trade that we take, we're closer to a winning trade. And we will also have additional strings of wins like we had in the 2 previous weeks previous to these last 2 weeks. So at the beginning of, in the middle of last month, which is really awesome. So that will come again. Let's just not dig a hole for ourselves when it's not working, and be ready and optimistic when it does start working again to be more aggressive at those times and take a lot of profit out of the market. It's really good to be with you today. I'll see you again tomorrow. Bye-bye.